The Central Bank of Nigeria says the emergence of the financial technology companies in the financial system accentuate the known risks within the financial system. The CBN has proposed a new licensing regime for all categories of payment service providers and FinTechs. Chigozie Muogbo, the head of research and economic intelligence at Diamond Bank, joined me earlier to discuss this development. Let's take a look.
It's a fact that the financial services industry in Nigeria has emerged to the point where there are so many players involved in transactions that are heavily interrelated. And because of the risk exposures that these transactions have, it is important that all players at the different segments of the value chain are ultimately and efficiently regulated. The role of FinTech in the Nigerian financial services industry is great, to say the least. Most important is that the customer experience in the industry has got tremendous improvement simply because there are players that came in and made value propositions that the customers were happy about. And that has significantly transformed the way all players across the industry, both banks and non-banks, insurance, asset managers, how everyone or every player now interacts and deals with the customer. I think that's a significant improvement.
Right. But now that we're seeing a more deliberate effort to regulate them, why do you think this is important? Because from the draft, the exposure draft that we're reviewing right now, we're hearing of minimum shareholders funds of 5 billion for certain categories of players, and of course for others it's as low as 100 million. That's huge capital to invest and deploy to be a player in Nigeria today. So your perspective on why this is important?
Okay, so to answer your question directly, look at this scenario. The recent data we have says that from now until 2020, about $3 billion in new investments are coming into the fintech space around Africa. Then pair this as well with the fact that credit to the private sector in Nigeria is about 22 trillion naira. Assets of banks generally is around 35 trillion naira. These are massive interconnectedness that happen between the banks and the fintechs. Now, why does the CBN need to regulate fintechs? It's simple. Operational risk, cybersecurity, information security. These are critical pillars of every financial system that must not be compromised at any point. So it is important that some form of governance, some form of structure, very clear, is established in the industry, such that gives investors the comfort to bring in even additional investment that is much needed in the sector, and such that gives banks and other players in the industry sort of comfort that allows the system to function smoothly. Remember that the ultimate objective is to achieve the financial intermediation, purpose that the financial system and the banks offer the economy, so to speak.
Right.
So it is important that we get it clear from that perspective. But let me mention, Wale, that the most important takeaway from this regulation is that there is some form of mutual exclusivity that the CBN introduced or is about to introduce in that space, especially as regards operators that offer switching services. That is to say that if operator A offers switching services, there are some other services it should not venture into, such that everyone is comfortable dealing with that switching service. But I think that is a very good thing for the industry. Right.
Speaking of fintechs, fintechs essentially work with, if you like, they work with information, and information is the lifeblood of, if you like, artificial intelligence right now.
No, that's correct.
There's this view that information sharing is really at the core of taking the digital age to the next level in Nigeria. And many are still concerned about information sharing within fintechs and, of course, the banks. Do you get the sense that with this proposed regulatory framework that we would see more information sharing, or do you think that's still something that we're still going to have to deal with going forward?
Well, I think there should be some form of increase in that regard, in the sense that this new structure sort of defines what each operator does. And secondly, that definition gives some level of comfort to everyone. So if I am a bank and I am to do business with a fintech that is into the payment space or other similar activity along the value chain, I know that there is a governance structure. I know that there is a framework. I know that the CBN is providing an oversight at the background about these transactions. So, these factors bring some level of comfort. And indeed, information security of course, it's key. Information security is key. But nevertheless, some bottlenecks around sharing information becomes muted. Although caution is still the watchword in the industry. So no one throws out customers' information arbitrarily. No, that would not happen. But some form of comfort would emerge. I am very, very positive on that.
All right. Final question will be, do you see a shift in the view of banks towards fintechs? Do you see significantly more collaboration between the banks and the fintechpreneurs, if you like?
Oh yes. We know that this is not a direct competition, so to speak. This has to be more of a collaboration. Such collaborations we have in the industry as we speak now has begun to create systems, technologies around banks that are intelligent about the customer. Let me give you an example. In Diamond Bank, we have the Ada chatbot, which is an artificial intelligent bot that does conversational banking with both Diamond Bank customers and non-customers. So what this means is that banks are investing heavily, banks are collaborating as much as possible, and that would continue into the near and long term. At the tail end, we are looking at a financial system that is integrated, a financial system that focuses its activities and transactions around robust and comfortable customer experience, one that is intelligent about customer needs and preempt and is proactive about offering such value add to the customer in a very convenient and comfortable atmosphere and manner. So that is the end goal, and we hope that we should be able to achieve this with collaboration of the regulators, the fintechs, and as well as the banks and other players in the financial system.
Chigozie Muogbo, Head of Research and Economic Intelligence at Diamond Bank.